Hello everyone, welcome to Just Invest Today, and today we're going to be talking about Stamps.com. Guys, I think this is a very undervalued growth stock, and we're going to do an intrinsic analysis on the stock to see, is the stock a buy, is it a wait, is it a sell, like what do we think about Stamps.com? And I know what you guys are thinking, Stamps.com, like what is this? I feel like the name of Stamps.com does not give it its just due. This company is a software as a service. Guys, that is very key in this company. They have reoccurring revenue. And that reoccurring revenue is what Wall Street loves because it's not guaranteed, but it almost acts guaranteed as you know how much revenue you're getting per month because that's how they do their contracts or that's how they do their fee structure. So you can see how this can be a really profitable business when you have a lot of subscribers or people who invest in Stamps.com. So let's get into it, guys. So Stamps.com. Stamps.com is a desktop app cloud-based platform that lets businesses buy postage online. Through its integrations with United States Postal Service and United Parcel Service (UPS), business owners can use Stamps.com to print postage and shipping labels without making a stop at the post office. Users can save even more time by scheduling package pickup straight from their place of business. So that's very key because the whole premise of the Stamps.com is making stuff more convenient for the person who has an e-commerce business, a business that is mailing, a home office, like all those things or companies or little small businesses. They're going to use Stamps.com because it's more efficient for them. They don't have to go to the post office and do all that small stuff. This just brings it more efficiently. So who is Stamps.com right for? Stamps.com is typically best for businesses that ship anywhere from 50 to 500 orders per month. So you have an e-commerce business or a brick and mortar shop with high shipping volume, it may be a good fit. Likewise, if your business relies on heavy and metered mail, you're more likely to benefit from the savings available through Stamps.com. That said, lower volume businesses may be better suited for shipping providers with lower or no monthly fees such as ShipEasy and Shippo. So ShipEasy is actually part of Stamps.com and Shippo. So people, this the thing about Stamps.com, guys, is there's a lot of other companies in this field. It's so easy to make another processing company like Stamps.com with mailing and stuff like that. So they have a lot of those options out there. So, but what I see as the differentiating thing about Stamps.com is their automation system for large businesses and large volume is next to none. So companies like Shippo and like the lower tier companies, those are, I think, gauging people that are not shipping as much as much volume and high doses of a product. But even though Stamps.com can do that, Shippo might be more geared towards that. So I feel like Stamps.com is in its own lane when it comes to shipping large volumes. And when you're shipping large volumes, those customers are more sticky because they have so much volume. They're not going to be switching around their products or what they use as a service. So that's what we think. So we're going to go into what is Stamps.com offering that I feel like is better than the competition and what they do, right? So we're going to go to their 10K. So customer value proposition for our mailing shipping business. So our shipping customers save time and optimize their shipping operations in a number of ways, including our solutions allow customers to easily access more than 350 regional, national, international carriers. Our solutions integrate with more than 300 partners, including shopping carts, marketplaces, e-commerce tools, various other software products. Our solutions provide customers with advanced order management features, including inventory management, combined and split orders, filters. Solutions provide customers with sophisticated automation features, rules, batching processing, picking slips, custom forms, and emails. So guys, when you go down this list, they do a lot. So when you integrate this platform into your company, you're gonna really need Stamps.com. And Stamps.com has that integration where once you integrate it, it's going to be hard to switch, or you're not going to want to switch. And that's one of the going down to the mode of the company. That's one key mode I see with the company, as people who have these huge integrated e-commerce platforms. Once you're in it, you're not going to want to leave it. And we're going to go back to that again later on in this video. So now we're going to talk about the e-commerce market. So the e-commerce trends. Was in their 10K. I just put it on a document. We believe that the underlying e-commerce trends are affecting our customers and our business. According to the quarterly U.S. Census Bureau retail e-commerce sales reports, U.S. e-commerce sales for 2020 were estimated at $792 billion, increasing 31% over e-commerce sales in 2019. E-commerce sales accounted for 14% of the total U.S. retail sales in 2020, which was up from 11% total retail sales in 2019. So, guys, what this is basically saying is that retail right now is really seeing a huge influx, and that's because we already know that a lot of businesses are staying inside. So, this year, just in this company this year, Stampscom saw like 28% growth, 33% growth in their business. So, you can see how they're just taking advantage of everyone sending out mail, people actually shipping out e-commerce stuff. And I'm going to be focused on the e-commerce because that's where I see this company taking off. But guys, we know that the all the COVID related stuff, that's going to die down. Like, that's not going to be sustainable. So you see 28%, 33% growth. We know that is not sustainable. But the fact is, guys, before that, they were still, 5 years ago, they were doing 23% growth. So it's not out of line that you can see this company at least doing 15 to 20%. And e-commerce, we all know e-commerce is booming. Like companies like Shopify, like all those companies, they're doing huge right now. So let's go to a chart. So this is on so guys, let's go to a chart. This is on Guru Focus. Revenue goes last 10 years, 23%, 22% in the last 5 years, 12 months, 23% in the 12 months. Guys, free cash flow goes 57, 26, 68%, guys. Look at what they're doing. This company is like just firing on all cylinders, guys. And that's what we like to see with these companies. Are the numbers backing up what the company does? So now I want to get into the competitive advantages that I see for Stamps.com. So guys, one of the competitive advantages that I wrote down, so Stamps.com advantage. We have 1 million customers in the US. So they increased their customer base from like 700,000, I think 794,000 people to 1 million. And that's increasing because more demand is coming. And they're saying that a lot of those customers that are coming, they're acting pretty sticky. That means that they're not turning over. Like they're coming, they're signing up with a free trial, and those guys are actually sticking with the business. So we have 1 million customers in the US, and that customer base is extremely attractive here. And now today, and we are able to do partnerships. This is very key. The partnerships is key. We've been able to do partnerships with other carriers. We have revenue share partnerships effectively with UPS and with UPS and with others. So guys, we're going to get into this right now. They have really good partnerships with really good companies. So let's see what they're doing. I want to give you a quick background first. When Stamps.com was killing it, going on all cylinders, you can see the stock was at 216, like 269, 253, 271, whatever, right? Look at this huge downturn that happened. Guys, that happened because they had a deal with USPS, and that deal failed because Stamps.com wanted more efficient shipping. They want better deals, but USPS didn't want to like succumb to what Stamps.com was doing. So they knew their revenue was going to get cut in half, or their profits get cut in half. And look what the stock did. It dropped like what, like 80%, like almost like, yeah, like 50-60%. The stock tumbled crazy, right? So that's what happened during that deal. But then look at this huge back spike. And guess what, guys? This is because they did a deal with USPS. No, UPS. They did a deal with UPS. And now you can see how that exclusive deal with UPS, they're going to be the low cost provider, guys, when it comes to shipping, because they have a 62% discount with these people. Guys, with that, let me get the quick, and this is okay, this is the reporting by the CEOs of the company, the quarterly reporting. So this is what they had to say. So with that, let me give you a quick update of UPS partnership. In 2019, we announced a new partnership with UPS, which allows us to offer attractive UPS package discounts to our customers. The discounts are currently as much as 62% off UPS standard daily rates. The discounts are available through our products without any necessary existing customer shipping volume that is frequently required to qualify for discounts when working directly with UPS. So guys, UPS is working directly with Stamps.com because they have $1 million subscribers. So that builds a network of people that they want to tap into. So if you're in that network and you're with Stamps.com, you get those discounts. So that's just going to keep building up, keep building, keep generating, because there's so much benefit. You're getting 62% discounts, and even with USPS, you're getting like 65% discount. They did a like re-partnership, so they have discounts with them too. So you can see how that can provide a low-cost provider if people want those cheap shipments, using the online service. And guys, when we talked about their initiative with other businesses, look at what they're doing. Let's discuss some of the 2021 initiatives in the U.S. market. First, we will further expand our shipping solutions through new partnerships and new marketing programs. During 2002, we announced new partnerships with Salesforce, SAP, Alibaba, Google Shopping, and others. We plan to continue partnering activity in 2021. We also recently partnered with and produced TV advertisement. Okay, whatever, but you can see they're partnering with all these huge people. And even Shopify came out with an agreement with ShipStation, which is their platform. They own ShipStation, Shipping Easy, Shipping Engine, MetaPack. They have a lot of like different shipping programs. And you see how they own a lot of that stuff? Like, it's so easy to make this, to come up with like a shipping solutions, but these Stamps.com is the leader. It has that huge, it's been doing that from like 20 years, 15 years ago, right? So they're leading in that sphere of online shipping. So that's how you can see the competitive advantage with this company. They have a network of 1 million subscribers. So people are partnering with Stamps.com to use that network to generate more money. So that's huge. Switching. People are not going to want to switch in and out when you're using ShipStation, Shipping Easy, Stamps.com. Like, it's just a hassle. When you have all your products on one thing, all that automation, all that tracking data, everything, all the management in your facility, why are you going to want to switch? Like, there's no, like, the only reason why you're going to want to switch if something bad happens, something like is just extremely off with the company. So that's another, and then the cost advantage. No other company is doing discounts like shipping, like a online shipping business like Stamps.com. 62% off potential with USPS and UPS, like 62 to 66% off discounts with your shipping packages, with all that stuff. So guys, there's huge cost advantages in that. So they're leading in that sphere. And in this presentation, they're saying they're going more globally too. So, and that market is just starting out. They have like 5% of the global e-commerce market with Stamps.com. So you can see the potential for growth. So you can see this attractive business and everything I've said. But guys, there's always bad, negative things about businesses, right? There's always huge risk. And one of the major risks I see is that they have to kind of rely on UPS and USPS, right? So they have to rely on these companies to give them those discounts, to give them these relationships for them to be able to send out packages. So guys, that's a pretty big negative, because what if they get into trouble with them or something happens, the government the government's been saying with USPS that they're going to reduce spending, reduce their debt, and all that type of stuff. So they have to maintain these relationships. And if these relationships go sour, look what happened when the relationship went sour. It dropped like 60-70% from 271 all the way to $40. So you can see if a relationship goes sour with Stamps.com, it's a huge negative which can cripple the stock. So guys, if you invest in this company, you got to be aware. So do your own investing research when you're doing Stamps.com, right? I got in around 190. I thought that was very cheap, but if it goes down more, I'm going to be investing more in this company. E-commerce is just taking off right now, even though they're doing 23%, 33%. I don't know if that's sustainable. I still think people are still going to stick to e-commerce even when the pandemic is over because they're seeing huge benefit. So tell me what you guys think about that. Do you see e-commerce staying the same? And even before the pandemic, e-commerce was growing at like 11%. So that's still a huge benefit. Stamps.com is leading in that field, in that arena, right? So let's go to actually the balance sheet, because this is very key when I look at Stamps.com, guys. This is another major key factor for me. Guys, look at their balance sheet. Zero long-term debt. Zero debt. Guys, they have $443 million in the bank. Like, with no debt. They have the potential. They are going to be investing heavily in R&D and basically building up their platform, their global platform. They want to be more globally too. So they're building that up huge. They're focused on, if they can find a good acquisition, they will buy a company outright with so much money, and it'd be easy for them to do it because that's how much money they have, and they've been growing their free cash flow at a 20-30% clip. So it's been amazing for Stamps.com. Their revenue growth, their profitability is crazy. So you can just see how Stamps.com is in an amazing position. They're just buying back their shares too, guys. And that's another thing. Stamps.com thinks the company is so undervalued that they're buying back their shares, guys. Like $60 million. They're taking advantage of. They're seeing that their stock is so cheap. They're taking advantage of it. So, yeah. So there's a lot to see right there. And guys, I'm just gonna do a quick intrinsic value estimate. So you can see all their numbers. They have everything, like revenue growing at like 23% to 33%, book value growing at like 36%. All their numbers are firing off. So we're gonna do a quick intrinsic value estimate and see what do we think. So if this company grows at 50%, let's see this company grows at 15%, and you can sell at a 30 PE. And sell at a 30 PE down the road, the fair value today would be $281 and selling at $212. So the margin of safety price would be $140. But right now, I'm not looking for a huge margin of safety. 30%, 20%, that's a good margin of safety in this market today. I feel like that's feasible. So in 10 years, the stock price would be $1,300. That's if it does 15%. And I believe it can do that. It can easily do that. Let's see if it grows 20%, which the company has been doing, guys. It's been growing at 20%. So that is another feasible thing. The stock price in 10 years would be $2,300, a fair price value at $573, margin of safety at $286. So if you are assuming this company can grow at 20% and sell at a 40 PE in the future, that's in 10 years, that's how much you can buy the company for. So these are not crazy estimates in my mind from what Stamps.com has been doing. We're gonna go to what's the analyst saying for Stamps.com? What do the analysts think? And analysts have you can kind of look at the analysts and kind of see where their mind's at. We don't always look for them for advice, but we can just see what they think about the company. So let me see what they think about what Stamps.com is going to do in the future. So next year, they're saying Stamps.com has 23% growth, and then in the next 5 years, 15% growth, right? So I think that's feasible. 15% growth, I think that's easily feasible, because they've been growing at 23. The past 5 years, they've been growing at 30%. And guys, and this is past 5 years. So what's gonna be the next 5 years when e-commerce is gonna be bigger and better? So think about that. But the thing is, they have a lot of competition. A lot of people come in this sphere because it's easy. It's not easy, but it's so it's not capital intensive to come up with these websites that help with shipping, getting postages so you can ship out your stuff and weigh it all out and all that type of stuff. So guys, man, I have a good feeling about Stamps.com in the future. I think this is an easy buy for me. I bought the company around 190, 200, around that mark. This is not investing advice, but do your own research, come to your own conclusions and what you think. I want to hear what you guys think about this company. Is Stamps.com over? What do you think? Tell me down in the comment section, guys. If you like this video, like, subscribe to my channel, and I'll get back to you in the next video. Peace.